Hey everyone, welcome to Max International Tax Talk. Today we will keep talking about international tax. For international tax, we know for the inbound tax especially, there are two important concepts. One is called net basis taxation, which is ECI, and the other one is called gross basis taxation, which is FDAP tax. So which is a gross withholding income imposed on certain US investment income. So today we're going to talk about how to distinguish these two type of tax system and how do you know whether your taxpayer has a ECI or whether your taxpayer has a FDAP income. FDAP, based on its terminology, it's referred to the fixed determinable annual periodical income. ECI refers to income effectively connected with your U.S. trade business. So when your taxpayer has ECI, then your taxpayer has some deductions can use to offset its gross income related with this ECI. So sometimes you have ECI, but you result to a net ECI because you can use your deduction to offset your income. And the net taxable income will be subject to 21% US tax. When your taxpayer have FDAP income, which is fixed determinable annual periodical income, FDAP only applies to U.S. source income. So only refers to U.S. source dividend, rents, royalty, interest type of income. So like for example, you have U.S. corporation, and U.S. corporation has a foreign parent such as UK parent. So when the U.S. taxpayer make a dividend distribution to this UK corporation, and this dividend will be subject to 30% withholding tax under FDAP system. However, in this course, we will not talk about the treaty's impact because treaty sometimes can reduce or eliminate your withholding tax, or maybe sometimes just completely exempt your tax in US. So we put treaty aside. We will talk about treaty in another session. So here we just want to talk about if treaty doesn't apply, your taxpayers' dividend income will be subject to 30% withholding tax. So the FDAP income for those interest, dividend, rents, royalty, 30% withholding tax will apply to the gross amount, not the net basis amount. But for the ECI, if you have foreign corporation, they have a trade business in US, such as they were selling some stuff in US and have some employees to sign the contract, then this foreign corporation has actually created a US trade business in US because US trade business, there is no defined term under code. So based on the case laws, we will treat it as some business profit generating activities which are consistent, regular, and not just one time. So if you have such kind of profit generating activities in US and it's consistent not one time, and also the amount have to be substantial, then you will be subject to ECI. ECI is 21% tax rate on the net taxable income. Compare the gross basis taxation, FDAP taxation, that's 30% amount, 30% tax applied to the gross dividend, interest, rents, royalty amount. Hope this is clear. And now I want to give you an example, like how you treat the situation. So for example, if you have a foreign taxpayer, and you have foreign corporation, they send some employees in US and provide some services to a third party in US, and this third party will pay back to the foreign corporation instead of pay those employees directly. Then those employees get their W-2, their payment, a paycheck from this foreign corporation. So do you think the foreign corporation will be subject US tax? The answer is yes, because its employees are providing service in US and they kind of representing the company, right? So when they provide service, they actually trigger a PE under the treaty concept, but also trigger a US trade business because the foreign parent co actually imputed by the activities conducted by this employee in US. And because that activity actually providing service to US co, US third party, and when the US third party make that service payment back, service payment is not FDAP income, is not subject to 30% withholding regime. However, that income is effectively connected with the foreign corporation's trade business in US. That's why that 30%, that payment, the service payment will be subject to US ECI taxation system under 21% tax rate. Unless treaty can apply to eliminate or reduce that tax, otherwise the foreign corporation will have to file a US income tax return directly just to report that service income it received for its employee service performed in US. Okay, I hope it's clear and I hope everyone understands the difference between net basis taxation and gross basis taxation. I'm looking forward to next session. We will talk about treaty next time. Thank you, everyone. Bye-bye.